He is the managing partner and co-founder of Prime Venture Partners, which has invested in companies like EasyTap, Hackerat, etc. He's a passionate marketing and executive with strong desire to mentor and lead entrepreneurs in developing disruptive technologies and business models. Prior to Prime Ventures, Sanjay has co-founded EasyTap and ZipTile. Sanjay, thank you so much for coming.
Is there a clicker? Yeah, that'll be great. Thanks. Thanks. Hi, everyone. It's great to be back here at Startup Saturday, and it's nice to see. Actually, I think the last time I spoke was at Embassy Golf Links in the cafeteria area when we had a conference, and it's just been growing. So it's amazing. I actually don't have much to say because Amit said it all. I think there's not much I have to add, but I thought I'll sort of dive into what goes into us and our decision-making process, and actually talk through some examples. Some of the things here I probably have not shared with the founders that we funded in terms of what we were thinking about them when we did fund them. So this might be a surprise to several of them. Hopefully they're not watching. But fundamentally, early stage is what we work in. So I'll really be talking about how we function. How many of the companies here have already raised funding from, say, a VC? Okay, so you're the only one probably who might not be interested in this section. Okay, got it. Good. So we live in really exciting times where theoretically everything is possible. And we personally, as a partnership, we have 3 partners: Shripati, Amit, and myself. And we have one partner emeritus in the US who keeps us honest, because he's we see entrepreneurs and we fall in love with the company immediately. And Raj has to tell us, guys, this is not going to scale. But fundamentally, the question we always look at is, all 3 of us have been entrepreneurs, and so our approach to investing is very different. Unlike what Amit said, we actually do not have any analysts in our partnership. So, we do get about 1,800 deals that come through various channels, and we only invest in 4 a year, right? So we probably get to meet maybe about 25 each, maybe 50 each during the year. And so it's very tough for us to also, do the triage of what's a good deal, what's worth meeting. And venture capital is a business which is very, very strange, actually. And I was never a successful entrepreneur. I had a couple of failed things, as we talk about timing, I was the CEO of MCheck way before Paytm existed. Again, timing was just absolutely probably one of the things that was wrong, although we may have also completely screwed up in our execution. So, there are a lot of other things that could go wrong as well. But got into venture capital really more by passion of wanting to work with startups. I figured if I can't do one successful startup, maybe I can do several. So, our fund itself is our startup, and that's how we have approached it. So we do a lot of things very differently. So the first question that really you should think about is, when am I getting ready to be fundable and all that good stuff? But how do I get in front of the VC, right? And in some ways, one of the things about early stage and our belief is that actually access to partners is the most important thing. And the larger funds, just by having 300, 400, $900 million, cannot do that. They cannot give you direct access to partners, right? So you will have to go through analysts, and they're really gatekeepers trying to make sure that this is good enough for them to get to the decision-making partner. But analysts, in principle, don't have any decision-making abilities, right? So just make sure you're not caught in analyst hell asking you for more and more data. You need to see a path to meeting a partner very early, okay? Otherwise, you should know where you stand, because no VC will tell you, you're recording all this stuff, man. No VC is going to tell you, I'm not interested. You will never, rarely will you, I think the VC that tells you I'm passing on this deal, which is a very strange thing. Again, this is a business in which fail means pass. That when someone says I'm passing, that means you failed, right? It's sort of, again, counterintuitive, but that's how the business, that's the lingo in the language, in the industry. But bottom line is you need to look for the no very, very quickly, because 99% of the deals we meet, we actually turn down. It may be a silent turn down, it may be a polite turn down, it might be a direct turn down. That depends on the VC style. But don't come out of the meeting saying, it went great, man, this thing is, going to turn into a term sheet. There are some very obvious things you can do, and it's very much like sales, right? If the customer is not calling you saying, I need you to come back and have a follow-up meeting, he is sort of neutral, right? Persistence does pay, but only up to a certain point. Right? So 3 of us have been entrepreneurs, and our style was to work very closely with entrepreneurs. So we, as I said, we only do 4, maybe 5 investments in a year. And so, our bandwidth is very constrained. So the primary way in which one gets in front of us is through an inbound introduction from somebody that we have worked with or we know very well, or one of our entrepreneurs, or, in very rare cases, but I have done this a few times, I've actually picked up the phone and called startups, right? So I see something interesting that I like and I say, okay, let me just call the founders and see. And a couple of deals we've actually closed where I reached out to the founders as well. So we have done a variety of things, but fundamentally I think, it's very important for entrepreneurs to understand that it's not easy to get bandwidth from a VC, and not because we are playing hard to get, it's just that we are inundated as well, right? So our philosophy has been and is that we want to do only 3 types of deals, right? They must be category creating. It's something where we can get involved quite actively and and play a role to in helping steer the thinking of the entrepreneurs. Although we are very clear that decision making is completely done by the entrepreneurs. But it's sort of a give and take in this relationship, and we don't like deals where the entrepreneur is saying, "Look, I just want to check. I know what I need to do." Right? There are other VCs who are very comfortable with that because they have larger fund sizes. Our model is not that way. And we have a few areas that we invest in, so I'll talk about that in a second. Right? But just stepping back a little bit, India, I think our belief here is that the opportunity is just incredible, right? I mean, all of us live through all the potholes and the poor traffic and the poor physical infrastructure, and we are certainly lagging. But with Aadhaar and the whole India Stack initiative and everything around that, India is absolutely leapfrogging the rest of the world in the digital space, right? This is like an uber macro tailwind that's happening. Nothing you and I can do is going to stop that from happening, right? We can whine all we want, but this stuff is happening, and it is one of a kind. So you can't look at models of the West and say, oh, it didn't happen there, why will it happen here? Because we have something interesting here that others don't have. And I've gone and spoken about India Stack around the world, and I can tell you the best of the entrepreneurs in Silicon Valley and some of the best VCs around the world are envious of what we've got. Right, and our competition actually is not just the people sitting in the room. All those companies are going to come targeting India as well, because this is a one-of-a-kind situation. So just remember this, don't try to do something that's swimming upstream. There are massive tailwinds here, let's follow them. So 4 areas we look at. We look at banking, our financial services. I think everything is turning into marketplace banking. Why? Because switching costs are going to be essentially zero. You can look at your phone and smile with take a selfie, and with an iris camera that's going to be in every single phone, you can open an account. So it used to be that the hardest thing was to open an account, and that's why you stayed with HDFC Bank or ICICI Bank or whichever bank you are with already, and so, okay, let me just get a car loan from here, let me get a home loan from here, let me do everything. The future is not going to be that way. Right? Because switching costs are very easy, because it's very easy to open an account, because it's very easy to transact, you will now go anywhere, just for the best offer that you can get for a particular purpose, and it doesn't matter who it's coming from, right? So that's how banking is going to be transformed, and is being transformed, right? Now, it's a tough area. There are a lot of moats, and Amit was talking about, can you build some differentiation in terms of your product, in terms of go-to-market, in terms of relationships, and I think that's where we feel we can work with startups quite a bit, but that's a tough. That's the tough part about this area. It's not an easy thing where you say, okay, I'm just going to build a bank myself. Second thing that's happening at scale in India and globally is digitization and formalization of the SME sector. Right, this is a huge opportunity, massively untapped. Even the Lala businesses of the past, I have a lot of respect for them, but as their next generation comes in and wants to run the business, they're not interested in running the family business unless there is, something exciting to do, and digitization and bringing them into the formal economy is a big part of it. Now there are some overlaps between, banking and offering services for SMEs, but in the sector. Third is, global SaaS. I think we've all heard about, Zoho and Freshdesk, and there are a bunch of other companies. We have a couple like HackerEarth and SignUp and a few others that are, making India sort of it's much more than a cottage industry now, right? It's a mainstream opportunity for large companies coming out of India. And, again, so this is a trend that we back a lot. And then we see India as a very aspirational emerging middle class. A lot of people want to, improve their lives. People have seen the value of being in the formal economy, and we're going to see a lot of that happening, right? So we as an investor are a thesis-driven investor. While we will do a few deals outside of these, but these are the areas where, we spend a lot of time, we research it a lot, and when an entrepreneur comes and talks to us, we're able to quickly appreciate, is this something interesting or not, right? So this is important for you to pick as well. Don't go to an investor that says, I'm an impact investor, and try to come up with an idea that is, say, the next, Paytm or something like that, because that's not their focus. So be careful about whom you talk to. So this is very quickly our portfolio. I think many of the names you all may be familiar with. As I said, SaaS and FinTech are two big areas for us, but we've also done some other companies outside of this area, Zipdial being, obviously one of the well-known ones. And we'll talk about some of these and say, what did we do? Why did we invest in these companies? So EasyTap, of course, I'm also a co-founder in EasyTap, but our belief was very simple, right? This is a monster opportunity in India. Every business is going digital, and they all need to be able to accept payments. The exact form, is it a device today? Will the device go away? Will it be Aadhaar? Will it be whatever? That doesn't matter. That's just evolution of the company, and all companies have got to evolve over time. But there's absolutely no question that it's a monster opportunity, right? So it checks that box, right? And there is literally no way you can quantify the size of this opportunity, but it's certainly very, very big, and by far it's big enough. The second thing is, there's an opportunity to disrupt the market with business models, right? So everybody was charging a percentage of the transaction. We walked in and said, we'll do a SaaS model, right? And of course, the whole industry later has switched to a transactional SaaS model, but we were the first to do it at that time. The team, of course, is very high quality. I mean, obviously, I have very high regard for the team, so I won't talk about that in detail. The value is obvious. I think this is a very important thing, right? It has to be a brain-dead message. When you talk to a customer, literally the 30-second elevator page, in like 5 seconds, people need to say, okay, I know what it does and to whom it's valuable. It doesn't have to serve everybody's requirement, but there is one large segment of customers, whether they are businesses or consumers, that this has an obvious value proposition for. Right? HapPay, which is a corporate expense card solution. How many of you knew HapPay before it was something we invested in? What was it? So it was a consumer app like a Venmo, built on top of Paytm, right? It might have also been very big by itself, right? But it had nothing to do with what it ended up being, right? Why did we invest in HapPay? And we knew from the beginning that it was a low probability that was going to succeed, right? For us, the only thing that mattered was we loved these two guys, Anshul, Varun, and they had one part-time guy who had just agreed to come full-time. That was the team, right? Nothing to do, eventual business has got absolutely nothing to do with where they were. But we saw certainly there are global opportunities around that we can build around this team, we can work together. They had a very clear understanding what they did not know. Right? We said, did you know you could issue a card? Did you know you could do this? They said, I did not know it was possible. Wow, we'd love to understand this better. Right? So the learnability quotient of this team was incredibly high. The tech DNA was really good, and they were ultra frugal. Right? Even now, a company, while it's quite a large company now, they have 200 plus employees, their philosophy and their approach is really, the DNA has not changed from the founders. Right? And you really look at this and say, you can build a big company when you have these key points. And these boys, certainly at the time, I shouldn't say boys, these young men, really had the passion and aspiration to build something very, very big. To this day, they are only thinking about one thing: how do I build a $100 million IPO-able company? Nothing else. Hacker Earth, I'm sure several of you may have participated in hackathons and challenges and stuff like that. That business also started as an assessment business. That's when we invested in Sachin and Vivek. Turned into a challenges and then hackathons, and now is a broader innovation management platform. They have run last year. They ran almost 200 hackathons in a year, which is 2 per week if you think about, or 3 per week if you think about it. So it's like a completely new industry, right? And this is an example actually where the two founders were deep technologists. In fact, even in Happy's case, the tech guy is the CEO and the business guy is the COO, right? And now eventually we have another VP of engineering, and Anshul continues to be the CEO. So there are some how should I say? There are some patterns that people think work. They don't always work, and more often than not, it's the exception that works, right? So don't say, well, my English is not the most fluent, I cannot be the CEO. That just does not matter at all. In HackerEarth's case, again, two just incredible founders, right? And we were 3 VCs at the time. All 3 of us were. I was on the verge of turning 50, and my other 2 co-founders are like 2 years behind my partners, and yet Sachin Gupta and Vivek, their combined age was less than each of our ages. Right? We sat in the room and Vivek once said, I have some good news. I just turned 23 last week, and they kicked him out of the room. I said, I don't want to be in the room with you. But they were just really sharp kids. They are very sharp. And I could see right there, the spark was there, desire to build something big was there. You could argue with them and they would think through and say, you know what, I've thought about it. I don't agree with you. Right? And that clarity of thinking was there, right? But the most important thing was, I think, that we always felt when we worked together, they listened and then they gave a considered answer. They didn't just say, no way, right? And I totally expect, when I work with founders, that listening quotient is very high. Listening does not mean doing as told. Listening just means being able to internalize and being able to debate something, right? So that's very, very important. It's not, and that's important because you can't be intimidated by investors, right? The founders are the ones that are working at the 0 foot or the 1 foot level of the company. We are hopefully at 1,000 feet, but most likely investors will be at a 30,000 foot level. So it's really, you guys who understand the business as the founders, and you are in the driver's seat, and it's important to listen but make your own independent decisions. And we look for that even during the evaluation process. Credex is another one where, amazing team, right? This is a deep technology product. They did not have a CTO in that company, right? And this is the one where I actually picked up the phone, called the founder, met him that afternoon, and he actually thought I was a fraud because he said, which VC will pick up the phone and call me right on at 8:30 in the morning. But the first day he got to meet Amit and me, and he said, wow, this is really something that I want to spend some more time with. And we had our moments, we had our disagreements with things but we came to decisions pretty quickly saying we wanted to work. And there was no technologist in that company. So when we invested, we said, one of the requirements is that in 6 months you've got to find a CTO. And eventually we found the CTO for the company through our network. Right? But the point is that we liked what we saw because they had an incredible knowledge of the domain. Just incredible knowledge of the domain. Right? And we felt that would trump anything here because their understanding of a hidden opportunity very few people had. We have another company that, in fact, we have also never announced, though I think everybody knows now that it's one of our portfolio companies. This company we funded 2 weeks after they launched the product. There were 2 guys with 1 intern. And this is a company that offers quizzing for in-classroom in the US market, right? And when we talked to references, they were literally 2 weeks old in the market, 2 or 3 weeks. But the references said, you have caught lightning in a bottle. This is such a perfect product. Everybody who uses it, the kids in the classroom, they just want to do more and more quizzes. This is so amazing for us, right? And they were like growing incredibly fast. It was totally, you couldn't stop them from growing. That's how fast it was growing, right? And today the company is hardly 18 months old. They are already present in 20% of US schools, right? And just growing at an astronomical rate, right? So, but ultra frugal, right? That now we have to force them, say, okay guys, get a data scientist, get this, get that. So they're now probably 10 people, right? But this is all sitting here, right here in Koramangala, right? This is not a company sitting in Silicon Valley or anywhere. There are some brilliant things happening here in India. Again, for us here, the customer testimonial was trumped everything, right? Because this was a very respected teacher saying, I cannot believe what these guys are doing because my students love this stuff. So some key points, and then I'll spend a lot of time with discussion and Q&A. And actually, Amit talked about a lot of these things, right? But there is no cookie cutter formula for a VC, right? A lot of it ultimately is gut feel and intuition, right? And remember that the VC that you meet has a job of actually having to write a damn check, right? We are walking into a meeting every Monday morning. I sometimes tweeted, in fact, yesterday also I tweeted saying, today is going to be a great day. Because I was going to meet 2 new entrepreneurs and I was like, I really hope this is as exciting as I think it can be. Because, we are sitting here in every meeting coming in with a lot of hope saying, is this our next multi-billion dollar? Is this the 100x company that we are going to be meeting, right? So, don't think it's an adversarial relationship, right? I know a lot has been tweeted and blogged about it. Adversarial relations have happened in certain times and I think it takes 2 hands to clap. But really what's happening is that, we are on your side, on the side of the entrepreneur. Yes, we may negotiate hard for terms once. But ultimately, our goal going into the meeting and spending 45 minutes to an hour to 2 hours is really to say, gosh, I hope this is really going to work out, right? And that's how we are approaching every meeting. So what happens is, team has to be just amazing, right? This is cliched, but I'll just say it over and over again. What does that mean? The product is absolutely going to change. The business plan, the only thing I can guarantee you is whatever numbers you put are not going to happen. None of us know what's actually going to happen, right? But question is, has this been thought through? Have you really looked at it and said, well, since I anyway can't predict what the heck, why am I putting a plan in place, right? So that does not work, right? Are there any key, so the sense we want to take out of the meeting is this team is going to figure it out, right? This is a winning team, right? They are driven by the right reasons, right? And my belief is the definition of entrepreneur is someone who is passionate about making the world better for others, right? Success, financial success, whatever definition of success you have is an outcome of doing the right things and doing them right. It is not the goal, right? That's very, very important. I mean, it's okay to say I want to make a ton of money and, I'm very happy when people say that, but that is an outcome. The day that's the goal, you'll start making wrong decisions in the business. And for us as VCs as well, we do not enter saying, oh my God, this is going to give us 1000x return. We hope it will give us 1000x return, obviously. But we are fundamentally looking at this saying, is this just going to make the world better for a lot of people? And for a large enough group of people, if that's the case, then there will be a valuable company here, right? And that's all we care about. How valuable, you cannot make out or decide early, but it, fundamentally is this going to improve the world? Some key insights and differentiators that this team has got, right? Sure, I know everything about, agriculture and farming that I could learn in a book, but fundamentally you would not trust me to, as a VC, because I've never done it before. I really don't know. All my knowledge is through Wikipedia. There has to be something insightful that I know that, that is not obvious that someone can pick up, right? And that's actually what your moats are. The moats are with the team, right, in the beginning. And over time, you build business moats and, technology moats. But to start with, it's really the team that is the moat. Listening quotient, learning quotient, we actually give an assignment to people. Say, hey, can you try this out and show this to us, right? And we attach a lot, probably a disproportionate value to how you handle that. Because it's not just a thing to say, okay, go and give us more data. It's actually seeing, have you analyzed something new? Because you will only be faced with new things that you have not thought about in a startup. So that's something that we look for. Are you solving a huge pain point? Right? And the question I always ask is, why would IBM buy this product? Let's say it's a B2B product, right? And really you have to answer that question, because the only reason an IBM or an ICICI bank will buy from a startup is, guess what? Any guesses? It's there on the board. They can't do it themselves. Nobody else does it better. Absolutely. It is such a damn pain point that I can't wait for IBM to solve this after 5 years, if I'm ICICI Bank. I just need it solved now, right? And you know what? The risk of working with a startup is very high, but gosh, if they solve this problem, it is so good, right? That's why a big company will buy, or that's why a consumer will buy from a no-name brand. Now, yes, of course, nowadays distribution is easy and the price of trying something out is very low and so on and so forth. But fundamentally, why am I going to share my credit card information on an app if it's from a no-name company? It's because I really need the service, right? And that's why I'm willing to part with something very, very, valuable to me. I mean, for a bank to, for example, launch a new customer service application, the biggest risk is their brand, right? And their customer trust. And that's the biggest risk they're willing to take, because this thing is 10 times better. This is solving a pain point for them, in a dramatically important manner. So it's very important to understand that you are solving a pain point for others. I ask people a simple question. Is this a vitamin or an aspirin? For a large customer base. If it's a vitamin, there is no way I'm going to fund this thing, right? It's a nice to have, right? What happens? Aspirin, you have a headache. Can you think about anything? IPL match is going on, last over, 7 runs to get. I've got this freaking headache, man. Can I get an aspirin? That's all you're thinking, right? But if you're feeling a little rundown, yeah, you want to take a vitamin to feel better. Okay, I'll watch the IPL and then take it, right? So it has got to be an aspirin. This is very, very important to understand. Value proposition has got to be very simple, right? We have a company that's in the tax optimization space. Value proposition is very simple. Everybody takes home 10% more. Do I need to explain that some more? Right, done. Right, now you can decide, do you want 10% more or not, right? It's both compelling and it's easy to explain, right, in that particular case. But that's how you have to obsess over getting it right. Right? Do not say that, oh, I did it to this guy, let me say the same thing, let me say the same thing, let me say the same thing, right? There's no point in failing the same exam 5 times, right? So if it didn't work the first time, that's okay. Figure it out and talk in conversations with people, right? And you'll be surprised who gives me the most simple articulation. It's my 80-year-old mother. Right? I explained something to her. I had Bheem. She's on iOS, so I downloaded PhonePe on her phone because it was there before Bheem. And then Bheem came, and so I downloaded that and I showed her. And my mom's pretty tech savvy. Mobile payments, I mean, she's my mom, so she's figured it out. And then I said, okay, which one shall I delete? And she said, delete Bheem. I said, why? She said, I can do Tata Sky, I can order gas, everything from, PhonePe. I told Samir that. He said, you made my day. But the point is that, people whom you might not expect will give you the most simple understanding of what they took away from a product, right? So it's very easy for us tech guys to talk to other tech guys. Sorry, I'm not ignoring this side of the audience. And to get more and more explanations, and we can say, wow, this is so cool, man, this uses NLP and AI, and wow, and you can do some deep learning stuff here. Customer doesn't care about all that stuff, right? You need to be able to explain it to the customer, and for that, somebody only looks at value. So value prop is very, very important, and but taglines and things that are critical, don't underestimate. Clarity on who isn't your customer is very important, right? Startups succeed for only one reason, that they do one thing substantially better than every big company does, right? And meaningfully. Yeah. So meaningfully better, right? So you have to make sure that you live and die by one customer, right? And it may be the wrong customer base, and that's why startups don't always succeed. To your, and startups don't pivot. That never happens. A pivot is sort of a continuous course correction, right? You may end up suddenly saying, oh, I'm there, I'm not pointing there, but you don't do this, right? And that has never worked, right? I mean, and we've heard several stories of companies that, oh, I have $25 million in the bank, and I'm going to do something very different. Doesn't work, typically. So you should really know who isn't your customer, and you should be willing to say no, right? Somebody is going to throw a lot of dollars at you and say, but if you did this, I would give you a 2 crore rupee contract, and it's very important to be able to say no. Or you say, that's the real opportunity and I'm doing only this now, and you forget about what else you're doing, but you can't do both. That you have to be very clear about. Macro tailwinds, this is the last big point I wanted to make. You can't bet against that. Like I talked about Digital India, right? Actually, a slight example and a slight exception to this was ZipDial. right? Because when we launched, everybody said this is an ice cube in the sun, will this really be big, etc. Our belief was that smartphone penetration, while it would happen and would happen at scale, was not going to happen as quickly as people thought. So that was our conviction. Actually, we did not succeed in convincing a lot of people. It all worked out in the end because we had not raised a lot of money, and therefore, mid-sized exit was also very exciting for everybody. But actually, the real story is that very few people believed that this could be a big company. Right, which is, I think they were completely wrong, because I think still today could have been a spectacularly large company. But you need to be able to convince people, and we were going against a macro tailwind. The big tailwind was mobile internet and smartphone, and we were not playing that game. And last thing I look at is, I ask people, everybody says, $1 billion opportunity, can you get to $100 million of revenue? My intermediate checkpoint is really $1 million of revenue a month. Right, and before that, so 1 million ARR, if it's annual recurring revenue, 1 million MRR, and then 2.5 million MRR. Because when there is a line of sight broadly, and realistically to get to that, a lot of other opportunities open up. So don't think that this one product that I have has to get to $100 million. That never happens. So the last thing is, remember on the other side of the table, right? We are balancing risk versus greed, fear versus greed. This is true with all our investments, right? Stock market, you have an opportunity, HDFC Bank seems to be dropping. It's a great opportunity here, should I invest in it? You are thinking of risk versus greed, right? And there are a variety of risks that we as investors are thinking about, saying, and there's one fear that I'm not listing here, which has a lot of VCs in the tangle. It's called FOMO, fear of missing out, right? And you've got to that's your job as the entrepreneur, to make us feel that how can you miss out on this opportunity, right? Doesn't matter what comes next or what came before me. I am the one that you should be backing, because you don't know what you're missing out, right? But it should be more, again, an outcome. That's not the goal. I really want people to say, I want to back this. Anyway, for those of you who were not up late last night, 2 days ago, this was something spectacular. You missed this catch by Guptill. Nobody would have given him a chance in hell. And if you see, he's a 6'6" guy who had jumped 3.5 feet and was full stretch. Took a catch probably at 15 feet high off the ground, or 12, 15 feet high. Nothing is impossible. Follow your dreams, reach out for the skies. And funding is a means, it is not the end goal. Don't be disillusioned by the fact that VCs say, okay, I'll only do 5 deals a year. And you're one of the other, 1,300 that they meet. The opportunities are there, and they are real, and you have to believe in that. Okay. Thanks a lot. I have some time for questions.
Thanks for a very insightful session, Sanjay. I guess a lot of real-time examples there, and I'm sure there will be a lot of questions. Ankit, can you pass on the mic? Mic's not working.
Okay, if you say you're in the front, just I'll read out. I'll repeat.
Hello, hi.
By the way, you need to be able to shout, man. If you want to be an entrepreneur, you have to shout about the thing. It doesn't matter. Yeah. Good. Let's shout. Yeah. No. I'll repeat it.
Okay. So, my name is Rishabh, and a really nice presentation. So, I wanted to ask you, do you or other investors in general fund startups which have not actually started up in the ground and on the ground? And if yes, then what are the qualifiers for such a deal that you look for? Like, how does it happen, and how often does it happen? Could you just throw some light on it? Thank you.
So about 1 in 4 deals we do in-house incubation. And we have a couple of examples there. And I would say Happy also sort of was in that category, though they were already running and then it changed. But I don't think a lot of people do it, right? Some people do sort of give you office space and stuff like that. We generally do that only when we feel that we fundamentally also believe in this opportunity, and we meet an amazing entrepreneur. So we're open to it, but it's also the exception. And very few VCs do that, right? So where it works is, by virtue of our collective 150 years on the planet, we have a few things that we also know, right? And we look at it and say, this has got to be a big opportunity, and we're not seeing necessarily some of the entrepreneurs coming with that, but there might be some in that area. But it's also a bit dangerous because you don't want a VC to change your business idea, right? So we try not to develop it too much. In the past, we have done some co-incubation and things like that. But we also, what we end up doing here is we look at this thing and we just keep building our knowledge. This is the point that Amit was making, right? Several good ideas are ideas from the past, but the timing is right? And then we look to see, can we find the right entrepreneur? And in a couple of cases, we have pulled people out of industry actually, who are very experienced guys who could pull this off. But it's, I wouldn't say there's a structured program by most VCs.
All right. Do we have a left-winged house here? Like, I see a lot of questions coming from there. Are you guys these guys?
I don't have a problem with that left wing, by the way.
Yeah, I mean, I don't either. I just wanted to know, like, out of curiosity.
Not the extreme left.
they are extremists. They are communists. So, right. Do we have questions here? This side? No?
Hey, I have a question. Yeah, hi Sanjay. This is Nawaz. I have a question regarding how VCs look at single founder companies. I run a company and I'm a single founder, and I haven't got this viewpoint from anybody so far.
So about a third of the companies we have funded are single founder companies, right? And in this one other case, which I should have brought up actually, is the founder who sort of has done his BCom on the side because his parents insisted, and he was an entrepreneur at the age of 14. This is Ashwin Ramesh at Sign Up. Right, one of the most incredible honors. That is probably the only time I've walked into a meeting and I met this guy and my decision was made in like 3 minutes, right? I mean, we took our time and did our diligence and all that good stuff, but really my mind was made up, right? Just an incredible guy, right? So, life is hard though, right? As a single founder, right? But so a lot of people, like even if you look at Jyoti Bansal's case, and he's blogged about it and talked about it recently as well, he did not have a co-founder, but he got some senior people later on. So the main thing here is you have to be able to build a team. As a VC like us, actually, I think is better suited for single founder early stage startups because we spend a lot of time. So it really depends on what support infrastructure you get. But today, I mean, if you look at today's presentation, from Amit and from the ecosystem here in Bangalore, I think there is a lot here going to even support single founder startups. So I think that mindset will change over time. Having said that, entrepreneurship is a very lonely business, right? And there are more bad days than good, right? As a founder, I used to always say 5 days of glory and 360 days of frustration, right? And in a leap year, guess what? It's 361 days of frustration. You don't even get a break in that year, right? So at that time, you can't talk to your spouse, you can't talk to your mother-in-law, you can't talk to your dad. Because they're all saying, what the hell are you doing? Go get a job, right? So you need a co-founder then, right? Or you need some mentors or advisors that you can talk to. That is important.
Sanjay, my name is Ronak. I just wanted to check what's your opinion on using the new services like India Stack and Aadhaar-based services to roll out services to the unbanked, to the underserved in terms of technology crowd of India, the next 500 million, who are starting to buy smartphones, who have internet, who have all the things needed to start servicing them. Challenges and what should be addressing?
Wow, amazing that you asked that. He is the evangelist for India Stack. I think we'll take one more question, the last question also, and then you can answer.
Yeah.
So good morning, this is Ashok, and my question is regarding the location actually. Bangalore being the startup hub and then like one of the fundraising capitals of the country and worldwide, what if a business idea is outside Bangalore? So based on you giving your mentorship to the companies that are there in Bangalore, how would you actually categorize and weight for your funding for the companies that are outside Bangalore in rural areas? So how do you wait for that, or even that fact Chennai, like how would you usually fund for companies that are in Chennai when you are actually based in Bangalore?
Yeah. Got it. Okay. So I'll take that one first, right? Are you an entrepreneur?
No, student.
Okay. Sorry? You're a student, right? So ultimately, if you're an entrepreneur, the most important thing to you is that your startup succeeds, right? Why would you take any chance with it, right? I think you would be in, within 15 minutes of Sony World Junction in Koramangala, right? That's the highest probability of, of succeeding, right? Just law of averages. In the US, between Silicon Valley and Boston itself, there is such a massive drop-off. That's not to say it's impossible, but why would you want to take a chance, right? Just do the best for your startup, and it's a small sacrifice to pay. And as a Bangalorean, I don't want any more people coming into the city. But, as a venture capitalist, if they are good entrepreneurs, I'll make an exception.
I think what probably he meant was like, what if the market is outside and you
Are you
require
talking about the market or the company location? Anyway, so the market being overseas, even there, right, there are certain things you can do from India, like quizzes or sign up, I've demonstrated. But at some point, you got to say, look, I have to be as close to my customer as possible, right? And that's very important to do. So to your question, India Stack, I think it's a once in a lifetime opportunity, right? So there are two kinds of opportunities. One is in the stack itself, one is in applications of the stack. I personally believe that over time, and I was just reading NPCI just sent out an pricing about, payments and stuff like that. I think the stack itself will not have a lot of money right? I would not invest in a company that's just doing, say, e-sign or doing something there, because government is going to make that essentially free. There will be certainly value-added services on top of that, and there will be applications of the stack, right? Now, the timing of it is something you got to be a little careful about, right? There is a small risk of your being on the bleeding edge if you don't time it right. So make sure the company is ultra frugal in the way it's run, and that it doesn't matter if it happens this year or if it happens after 3 years, but it's like a toy. You wound it up, but you're sort of releasing it, still keeping a hand on it. At some point you may need to release it and let it fly. So I would say the time is now, and or the time was yesterday, and you're already late today, so get started. I also just want to make a point. We have done a couple of hardware startups, both are like EasyTap and Nimble Wireless. So there are VCs but not just hardware, we have done mostly hardware offered with a subscription service or an IoT type of a service. We've not done anything in consumer, I'm not sure we would do, but there are people. So I think it's changing now, and I think the willingness to look at that from India is a lot more now.
Thank you, Sanjay.
Thanks a lot
so much for
I'll be around for some more time.
Yeah, I think he's got about 26 years of experience.